I'm just going to go through this step by step, hopefully to help you in your revision and just clear up any issues that you have. So obviously we're starting in January here, and we are just filling in from the balance sheet. So the 660 minus the 33,000 depreciation, 85 minus the 38,000 depreciation. Then we're into stock and debtors. So the 78,280, that's less provision of 5%. So in that case, what we're looking at here is we're saying that the 78,280 is only 95% of the whole. Okay, so what you need to do then is divide the 78,280, divide it by 95 and multiply it by 100 to get the full figure. Okay, so that full figure then, the 100% is 82,400. Okay, to get your provision for bad debts, okay, then you have your 82,400 minus the figure given in the balance sheet, the 78,280, and that's your provision for bad debts. Again, just remember that's shown as a negative because, again, in the cash flow, or in the balance sheet, sorry, it's debtors minus provision for bad debts. And lastly, these two, you won't have them in your particular question yet, they come up later on. The reason why I have a blank space here is just for one of the later adjustments. I need that extra space just to explain that, okay, so don't take any notice of that. Liabilities are straightforward: trade creditors, the bank, expenses due. The ordinary share capital is 450, share premium 59, and profit and loss balance is 205, 400. Okay, so once we have that in, we can begin doing our adjustments. So the first adjustment is revaluation. So Miller Limited decided to revalue the land and buildings at 800,000, and they've just mentioned the land element here. This isn't relevant right now, this is going to happen later on. So our current value is 660,000 for our premises, our land and buildings, and so to find out how much it's increased by, you just do your 800,000 minus your 660, and the answer then is 140,000. Okay, when we do a revaluation, okay, we make sure that we empty out the depreciation account, so we balance that off, and therefore, because depreciation is a negative asset here, we put in a positive 33,000. Okay, and then that totals up to 173,000, and that 173,000 goes directly into our revaluation reserve, just like it would be in our revaluation questions. So that's all you need to do for January. Okay, so February we have the Millers bought an adjoining business. Okay, so 120,000 buildings, 35 delivery vans, debtors 15,300, and creditors 11,000. So we just slot all of those in, okay, first of all. The purchase price was discharged by granting the seller 140,000 shares. Okay, so that goes into our ordinary share capital, 140,000 shares. Okay, and it was also at a premium of 30 cents per share. Okay, so 140,000 shares multiplied by 30 cents is our 42,000. Okay, when all of that's done, it's not going to balance because we actually ended up paying above the book value of the business, and the difference then between those two figures is the goodwill here, or 22,700. Okay, so when we add up all that the business is worth and how much we actually paid for the business, there was a difference there of 22,700, and that of course is goodwill. The management made a decision to reduce the provision for bad debt to 4% of debtors at the end of March. So in February we had an increase to our debtors, so the total that our debtors stands at now is 97,700. Okay, and 4% of that is 3,908. Okay, so our provision is currently at 4,120. Okay, and it's standing here as a negative asset. Okay, so if we want to reduce that, okay, to 3,908, that means the difference there is 212. Okay, and if we have our negative 4,120 positive or plus 212, then it becomes our correct provision, which is 3,908. Okay, so that's why we've increased it here. Okay, and it then goes below into our profit and loss account. Okay, so we're increasing the liability of 212. Okay, so that's it for March. For May, we received a bank statement at the end of May showing a direct debit of 4,800 to cover car insurance for the year, or insurance, ended the 30th of the 4th, 2019, and a credit transfer received of 8,800 to cover rent received in advance for the period May 1st to March 31st. Okay, so we don't have to really deal with any of the dates and details here. We just need to make sure that we're putting it in correctly into our actual tabular statement. Okay, so we're looking at May here. The insurance prepaid, okay, goes in as an asset, 4,800, and the rent goes in as a liability, okay, of 8,800. Okay, the difference there is 4,000. Okay, so we've actually received 8,800. We've paid 4,800, and that means that we actually have €4,000 extra cash in our business, okay, and that goes into our bank account. And because obviously our bank account value is increasing, the bank account liability is decreasing, and that's why it's a negative number. September, a dividend of 5 cents per share was paid on all issued shares. Okay, we're going back up, we're making sure that we're counting, okay, our 450,000 shares that were issued originally and adding our 140 shares from Miller. Okay, and we just multiply that by 5 cents per share. Okay, so we pay out those that dividend that comes out of our bank account. Okay, so our bank account liability is increasing by 29,500, and our profit and loss liability is decreasing by 29,500 because of the shareholders' happiness, and they feel they're getting their money back in dividends there. November. So November here is 2 adjustments, okay, in the 1 month. Okay, and you can deal with this how you like. You can put 2 Novembers in, like we have 2 Decembers, okay, or you might just have to do like workings on the side. Say that's why I had the extra line there for debtors and the extra line there for the profit and loss account. So it's up to you how you want to show it, because at this stage, obviously, you're nearly finished your tabular statement. You've this drawn out on paper, and you might not actually have space to do what I've done there. So you really need to just make a decision on what space you have available to you at that time. So we'll just look at it. A payment of 840 was received from P. Ryan, a debtor whose debt had previously been written off and who now wishes to trade with Miller again. Okay, so 840 obviously into the bank, we've received that. Okay, this represents 70% of the original debt. Okay, and the debtor has undertaken to pay the remainder of the debt in February 2019. So at this moment in time, we have the 840, which is 70% of the debt. We need to figure out what 100% of it is. So it's 840 divided by 70, multiplied by 100, and then that's 1,200. Okay, that goes in as a positive to our profit and loss account because we thought that money had gone, and we thought that money had essentially disappeared, but we actually are going to get that money now. We've previously written it off, and now we're bringing it back into that account. Okay, so if he owes us in full 1,200, he's paid us 840, that means that he still owes us €360. Okay, and that goes in our debtors. So the figures in black are the figures in this first paragraph here. It's been completely dealt with and it's balanced. Okay. On the same day, goods to the value of 780 were sold on credit to Ryan. Okay, so he actually now becomes a debtor for 780 also. Okay, so this is where you need to make the decision. You might have 360 already in there. You might decide to erase the 360. Okay, put a note over here, 360 plus 780 equals 1140, and only put that one number, 1140 here. Okay, it's correct in any way. The numbers will still all add up, it's still correct. You just need to decide whether you want to do it that way or not. Okay, so he owes us 780, but how much of our stock is actually being depleted? So that was a markup cost of 20%. So essentially that 780 is 120% of the value of the goods. So we divide by 120, multiply by 100, and the actual value of that stock that he took was €650. Okay. If the stock cost us €650, we sold it to him for €780, we've made a profit. It's the difference between the two numbers. The profit is 130. Okay, and again, this is our second entry to the profit and loss account. So you might decide to erase what you have in there already, do your adjustment to 1,200 plus 130, and then just put in 1,330 here. Okay, it's up to you how you want to do it, working with space. Okay, either way is correct. Or you could have November here for the top part and a second November for the bottom part. Again, it's all going to depend on space. Okay, but you're going to get full marks regardless because you've done the adjustments right. Okay, almost at the end now. Depreciation charge on buildings, okay, for the year is 2% of book value. Depreciation charge is to be calculated from the date of revaluation or date of purchase as appropriate. The total depreciation on delivery vans for the year is 21,000. So there we go with our 21,000. That's our first figure in. I'm going to zoom out here and just show you what we've done so far with these particular buildings and premises. Okay, so the first transaction we did, okay, was actually a revaluation in January, and then we bought a premises in February. Okay, so we need to do our two different transactions here. Okay, our revaluation, okay, we're going to do that separately. So we go back up to January here. We've got buildings at 800,000. Okay, we take away the land value, 130,000. Okay, and then we just multiply that by 2%. Okay, because we revalued it on the 1st of the 1st, so that's the full year. So we get 2% of that, and that's our 13,400. Okay, that's our final figure for the first set of buildings that we had. In February, we bought an adjoining business, okay, and the buildings were worth 120,000. Okay, so that 120,000, we get 2% of that. Okay, and that gives us €2,400. But we did not have that for the full 12 months. We only had it for 11 months, and therefore we need to multiply or divide by 12 and multiply by 11 months. Okay, and therefore we get the 2,200 of the actual depreciation. Okay, and our final figure then is made up of the revaluation depreciation amount plus the purchase depreciation amount, which adds up to 15,600. Okay, I'll just zoom back in here. So total depreciation then is 36,600, and of course that goes in as a negative to our profit and loss account. Okay, and that's being balanced. The last part that we need to do on every tabular statement is look at the prepaid, okay, and the due expenses. Okay, so insurance prepaid, we go back up here and we need to be really, really careful of the dates. Okay, so direct debit of 4,800 to cover insurance for the year ended 30th of the 4th 2019. Okay, so what are we actually looking at here? We got it in May. Okay, so if it was for the year ended the 30th of the 4th, that means that May was included, okay, in this. Okay, it was a year. Okay, so that 4,800 divided by 12 and multiplied by the amount of months used. May, June, July, August, September, October, November, December. Okay, 8 months used. So 4,800 divided by 12 multiplied by 8 gives us our 3,200. The rent, okay, is a little bit different than we've seen before, and it's again really important that we don't assume that the rent is going to be 10 months, or we don't assume that it's going to be a certain amount of months. Okay, so we received it and it paid in advance from the period of May 1st to March 31st 2019. Okay, so we'll literally count that up on our fingers again, no mistakes. May, June, July, August, September, October, November, December, January, February, March. 11 months. Okay, it's it's paid for 11 months. So that means that it's 8,800 divided by 11 months multiplied by the amount of months we used it, which is 8. Okay, so 8,800 divided by 11 multiplied by 8, and that gives us a 6,400. Okay, and that is in the wrong section. Okay, so what we're looking at there then is our difference between the two. Okay, so our 6,400 and our 3,200, and then that goes into our profit and loss account. Okay, and the reason it doesn't go into the bank at this stage is because we're actually just looking at what has actually happened this year. Okay, when we got paid those monies, okay, the credit transfer and the direct debit in May, that was actually cash that we received, and that was money either coming into our bank account or leaving our bank account. Okay, now in December we're doing adjustments and we're figuring out, okay, have we actually made a profit on all of these adjustments, or have we made a loss on the rent prepaid and expenses due and things like that. Okay, so that's why it goes into the profit and loss account. And then you add it all up, okay, you do your totals, and again, they're quite important. This is sideways now, and I know it is a bit of a headache trying to read it sideways, but just look at the marks, the scheme that's going here, and look at where the marks are going. Okay, marks going for some of the totals. Okay, some of the totals, and those are the ones that you really need to be careful in. For example, here with the insurance prepaid, okay, the 4,800, the 3,200, and then the total next to it, goodwill. Okay, all of those totals, do be extra careful, especially to see if they're positive or negative numbers overall. Thank you.